Fibonacci and trading. Fibonacci sequence definition. The first two numbers in the Fibonacci sequence are 0 and 1, and each subsequent number is the sum of the previous two. So we have 0, 1, 1, because 0 plus 1 equal 1. Then we have 1 plus 1 equal 2. Then 1 plus 2 equal 3. So we go 5, 8, 13, 21, 34, 55, 89, and so on. Fibonacci numbers found useful in trading world. We are using this sequence to spot the best support and resistance points. Fibonacci numbers are mathematical relationship derived from the Fib sequence. The key Fib levels are 0, 38.2, 618, 100, 1618. The amazing fact is that a lot of features in the nature can be connected with Fibonacci numbers. Petals on flowers, seed heads, and shell spirals are most commonly connected with the Fibonacci sequence. This is just one of the reasons why we need to try using Fibo in our day-to-day trading. Here is a list of most commonly used Fibonacci numbers in the trading world: 38.2, 50, 618, 78.6, 1, 127.2, 1618, 2, 2618, and 423.6. In the quest to predict market future points, we are going to look at the Fibonacci numbers and Fibonacci tools. To predict the ending points of any move, we are going to use one of tools available on every platform: Fibonacci retracement tool and Fibonacci expansion tool. We are using Fibonacci retracements to determine the potential ending points of the pullbacks of the larger trend. The best usage of Fibonacci retracement level is for potential entry points for the next move in the direction of larger trend. We use the Fibonacci retracement tool by drawing Fibonacci from the start to finish of the previous trend move. The most common level that we are going to use for a Fibonacci retracement are going to be 23.6, 38.2, 50, 618, and 78.6%. Now, if we look at this pair, that's the Canadian dollar yen, we can clearly see that here is the uptrend. So what we can predict with the Fibonacci retracement in this case would be this pullback, and we would draw it from the start to end of the previous trend move. And as we can see here, price started to move lower and found the support first at 23.6, after that at 38.2, and finally we found the support few points above that 50%. Keep in mind that it's not always that market will turn exactly at that point, but there is a lot of chance that we are going to see some sort of move at the time when price tests one of these levels. So let's see here. We have a down move. So what we can predict would be every move to the upside. So the ending points of each pullback to the upside can be predicted. So if we start from the high, the first Fibo that we can draw would be from high to this low that we marked on the chart. And we can see here that we found a resistance around the 50%. Now, you don't need to stop there. You can always use and expand the same Fibo. So for example, market moved a little bit lower after that first push to the 50%, and then we redrew the Fibo, so everything is the same. So starting point is going to be the same, ending we are just putting towards the end to the current low. And here we can see that price found the resistance pair at 78.6%. So let's move on. So the same pair, the first pullback, we're just using that high to low point, and we can see that price found the resistance pair at 618. If you move more, we are again just drawing the Fibo, and we can see that price if we draw Fibonacci like this, found the resistance between 23.6 and 38.2%. But in my opinion, this would be counted more as 23.6%. Now, even if you draw the Fibonacci this way, so if you just take that previous drop as the only wave, you wouldn't really get much different reading, because here we can see that we found resistance at 38.2%. So don't be afraid of how you draw the Fibonacci. However you do it, Fibonacci magic will really give you that benefit where you want to look for that end of a correction. Let's see here. So large Fibonacci, and the final pullback ended around the 38.2%. That's why I really love Fibonacci. Yeah, let's see how we draw the Fibonacci in the bullish market. So can predict these three potential pullbacks. So if we start from the bottom to the high, we can see here that the first pullback ended around the 23.6%. So if we draw again, we can see the next level again found the support around the 23.6%. If we move again, price found a support around the 23.6%. And it's going to be the common theme. Usually you won't get much different levels when we are talking about a larger and stronger trend. Usually if first pullback is 50%, more or less all other will do the same thing. Or if we see that shallow pullback at 23.6 only, there is a good chance that in a really strong trend, especially during the news, we are going to see a continuation of that 23.6, maybe 38.2, but 23.6 will be that safe bet. We are using Fibonacci expansion to determine the potential ending points of the current trend move. The best use of Fibonacci expansion level is the potential target points for your trades. We use the Fibonacci expansion tool by drawing Fibonacci from the start to the end of the previous trend move and then projecting from a pullback. Okay, in this case of Fibonacci expansion, we are going to look for the levels of 100%, 127.2, 1618, 200, and 2618. So keep in mind that with Fibonacci expansion, we are going to really measure the previous trend move and compare it with the current trend move. And our goal is to see at least that equal lags between the previous move and the current move. Let's look at a few examples. So over here, the trend would be bearish. So we can use the Fibonacci expansion to try to find the end of every drop to the downside. And now, as you can see here, we have a 3 points. So we have a start point and end point. The start and end point represent the start and end point of the previous trend. And the third point would be our pullback. So the end of the pullback. And as we can see here, price reached 100%, 127.2 and come close to the 1618. Now, here is another example. Same chart, just a different part of the chart. So we are again measuring the previous trend move and we are comparing that from the end of the pullback. And over here, what we can see is that we tested 100%, 127.2. We tested the 1618, but we never really tested at 200%, at least not at this chart. Price tested, but I couldn't pull up everything. But what's important here, what you see is that, let's say, if you are trading to the downside from that pullback, first of all, you want to try to target those levels. So 100% would be the first target to watch. Don't right away start from targeting at 200, 2618 and higher levels. Start with the first level that we have. That would be the 100%. And we see that price made a pullback. And if you re-enter there, then you're moving down to the 127.2. Price in this case just break below the 127.2 and move straight down. So if price don't find any support or resistance depends on the side, you're just going to look at the next level. Here at the 1618, price found some sort of a support, made a pullback and started to move lower again. So once price continued to move back in the direction of the trend, we are just going to use that next Fibonacci level. In this case, 200%. Let's see here. We have a strong uptrend, and if we start growing just from the beginning of that uptrend, we are first of all comparing from the start to end of that first spike higher and putting that final line at the pullback. And what we can see here is that first we tested at 100%, then we tested at 200% just because everything 127 to 1618 and 200 was reached in one candle. So I would just skip to the 200%. Price made the pullback after that and continued to move higher to 2618. Now, definitely you have a little bit more data after that, so we can go and redraw our Fibonacci expansion just to get a better levels. So we're just redrawing from the bottom to the end of the first trend move and moving to the pullback. And over here, what we can see is that price found the resistance at the 127.2. So we can use the same thing because price continued to move higher. So looking at the 1618, the 200, and then the 2618. But also, if you want, you can always redraw that existing Fibo and you would get that price ended that trend around the equal X. So 100%. Let's see a few examples over here. So the first push lower, pullback, and we tested 100%. Made a small pullback to the upside and price continued to move lower. We tested the 127.2. We then made a small pullback, continued to move lower, broke that 1618, so there is no any support there. We come to the 200%, nothing major there, but at the end we made the pullback and ended the trend move around the 2618. So also, you don't always need to use the Fibonacci expansion for just your targets. Just because they are going to provide the good support and resistances, that's going to be the place where you can start thinking about the potential continuation plays. Just wait for that pullback, and then you will know what levels you can easily target if market continue to follow the larger trend. How Fibonacci help your trading strategy? The main goal of using Fibonacci levels in your trading is to determine better support and resistance areas that can be helpful in your trading. We are going to use this approach to understand when we should look to find a good entry and exit point. For example, if we are in a larger upward trend and current price action reach 38.2% level, we can quickly check if there is an opportunity to enter a market. So just check if, for example, we have some sort of a formation that would allow you a continuation like a flag, like a triangle. If not, fine. But in most cases, you will find something interesting, something that will allow you to go and enter the trade. You should start keeping a track of the major Fibonacci levels of all the pairs that you plan to trade. Just drawing a simple fibs on the chart and put the alerts on the key level. So draw Fibonacci retracement or expansion, put the alert on them so you just get aware if something happened. We are going to talk more about how Fibonacci should be used with our ND10X system in later videos. For now, I recommend pulling up a couple of charts and try drawing Fibonacci retracements and expansions.